Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner with us as always to talk all things markets. University of Missouri, Scott Brown. Happy dreary Friday to you.
Good afternoon, Megan.
Are you still floating? I know it has been, and I shouldn't laugh. There has been a lot of moisture fall in the western part of the Corn Belt. I know a little bit very much welcomed further west of you in some of those states that have been struggling for some precipitation.
Yeah, so I do think we'll at least get some short-term change in the drought monitor map in some places, given everything that's been happening. So it's good news for some. We certainly have plenty of rain, but it looks like maybe next week will dry up and be warmer. And I have a hunch a lot of crops will get in the ground next week if that plays out.
Planters rolling and getting those corn acres. It's always interesting, really, before we get started, how quickly we can really get this crop planted, even though we're running so far behind our average 5-year pace.
Clearly, it doesn't take us very many days now to plant corn in this country. And although it's been slow, again, I expect a big catch up next week if weather turns out as many are suggesting it will.
Well, here's hoping. All right. So we've got a little trade to talk about. We're going to talk a little bit on the demand and the consumer side of things a little bit as we take a look at the jobs report. But to kick things off today, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, live cash cattle were basically unchanged on the week, Megan. On those feeder cattle markets, we were anywhere from $1 to $3 higher this week. On the cattle future side, live cattle futures for June were down 30 cents. While the August feeder cattle futures contract was up $5.85 this week. I think that was due in part to what was nearly a 27-cent decline in July corn futures, helping those feeder cattle futures move higher. On the beef side, choice box beef prices, $4.90 below where we were a week ago. That now puts them more than $45 below year-ago levels. So it's quite a change relative to what we've been used to. On the hog side, cash barrels and gilts also basically unchanged this week. The June lean hog futures contract was down $2.20. We did get a 50-cent increase in the pork cutout value, but it is also now about $7 below where it was a year ago at this time.
My bacon is not cheaper, though.
So it's so you bring this up. It's interesting to have the discussion that. So I'm curious, next week we'll get CPI out again. What does that look like in terms of retail meat prices? So although we've seen lower wholesale prices and, again, a choice box beef price, well below year-ago levels, yet retail prices have been sticky. A lot of cost increases. When you talk about diesel fuel now pushing past $5 a gallon, I have a hunch retail prices will stay fairly high.
It's been interesting. I've been doing like a little straw poll with some of my mom friends to see where their grocery store bills are going and some of the products that they're seeing higher prices. Bacon has been mentioned. Eggs continue to be mentioned, which I think makes a little bit of sense. We're coming out of the Easter season, continuing to struggle with high path avian influenza. And it's definitely incredible to see how things have changed in the last few months.
For sure, and we may not be done as well. When you think about on the supply side, what we're doing in both cattle and hogs, we're not increasing supplies really there of those meat products. So usually when supplies get tighter, we tend to talk about higher prices as well. So I'm not sure how much more strength we get in retail prices going forward, but I don't think we slow down too much here for the next few months.
All right, let's talk slaughter numbers as we take a look at those. How are we stacking up compared to last week?
Yeah, when we look at cattle slaughter for the week ending May 7th, USDA is telling us a run of 657,000 head of cattle. That's 8,000 head above a week ago. 18,000 head above a year ago. While on the hog side, a run of 2.427 million head of hogs this week. That's 38,000 head above a week ago and 31,000 head above a year ago.
And year-to-date comparisons?
So we continue to see cattle slaughter about 0.5% above year-ago levels, while hog slaughter is down 5.4% relative to a year ago.
First report this week we're going to talk about is monthly trade data, which as we take a look at that, that pork export number really kind of stands out.
Yeah, when you look at what we got for March, monthly pork exports down 386 million pounds relative to a year ago. Just a little bit of perspective here. So in January, we were 96 million pounds below a year ago. In February, we were 202 million pounds below a year ago. Now this month, we get 386. So it's not the right direction. And in fact, if you look at weekly data and try to kind of think about April, it could be off harder in April than it was in March, given what we see weekly thus far. So not a lot of good news on the pork side. And of course, much of that can be explained in one word: China. As China production has recovered some, that there seems to be less of an appetite for U.S. pork headed to China. Don't forget, we also are running a tariff on our product going into China right now as well, a higher tariff relative to some other countries. On the beef side, continue to get some positive news there. March was 49 million pounds above a year ago. That's kind of what we've been running for the first few months. January was 42 million pounds higher for a point of comparison. And it looks like when we look at April and the weekly data that's already out there, we'll likely find the monthly trade data coming in higher for April 22 relative to 21 as well.
When we look at this, how much are we thinking about the cost of our product right now? How much are we thinking also about availability of our product? We've talked before. We know on the beef side of things, we're going to run into some shorter supplies. Could we potentially see an impact to what happens and what we're exporting as we're trying to continue to meet our domestic demand here at home?
Yeah, so I think higher prices have certainly helped moderate perhaps some of that demand growth internationally. I will say when you look at export value instead of export volume, it still looks like a better picture for us. Yet I think we're certainly running higher prices at consumers in the rest of the world, and competing products might look more attractive than they have for a while. So maybe markets do work at the end of the day, and my economics training has paid off, and that as we get less supplies, we tend to run higher prices. But I do think that export side is a little bit of the shock absorber we have at times, depending on what kind of domestic supplies are available.
Jobs report out this week, and as we take a look at those numbers, some pretty good news overall.
Yeah, for sure. An increase in April of 428,000 jobs today is what we got. Anytime you can add north of 400,000, you got to feel pretty good about that in terms of new jobs. So nothing's really changed there in terms of our ability to generate new jobs. It was fairly close, in fact, a little bit above pre-report estimates that were out there. So the jobs numbers continue to come in strong. When you look at wages, over the last 12 months, the average hourly earnings have increased 5.5%. So they have been going up. It's not surprising we're seeing that given, less labor availability. But I'd remind us that even with the 5.5% increase, they really haven't kept up with overall inflation we've seen in the country.
As we talk about higher wages, but we also look at the inflation aspect of things, and we know that goods are running more expensive. At what point does that potentially, or how close are we watching to see the potential impact on consumer demand and how purchases and where purchases lie at the grocery store, for example?
Yeah, so I think the answer to that question still lies in what happens to the general economy in this country. If we continue to see slowdown, or we get closer to that R word, I do worry about what that means when we're running record prices at consumers for things like beef and pork. It's hard to say we're going to completely back away. I will say this is very much income level dependent. Those at lower income levels are certainly going to struggle more than those at higher levels. Those at higher income levels may complain about food costs, but probably don't adjust their consumption much. Those at lower income levels are probably going to find themselves trying to buying some cheaper products. That's not easy though either when you think about across the board. Beef, pork, chicken, all three are still fairly high, so there's not an easy substitution. So perhaps it's I'm going to buy lower quality products in a category, not switch among meats.
Scott, that's it for us today. It's a short week for us, but as we look ahead to next week, what are some of the reports we're watching for?
Yeah, so a big week next week. We get retail prices out midweek. We also get USDA's monthly WASDE report out, which will give us our first look at 2022-23 on the crop side. So what are they seeing in the look ahead? And we'll end the week with consumer sentiment.
Always great to visit. Always great information. And we will see you next Friday.
Have a great weekend, Megan.
You too. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com and click subscribe. You can also submit questions and comments there. And if you're looking for some great podcast material while you're in the cab of the tractor, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grevner for Brownfield.